Good afternoon, everyone. Welcome to the session. I'm Daphne from the Institute of Banking and Finance, and I'm my host today. We are delighted to be partnering with Thought Machine for today's sessions on digital transformation in banking and next-gen technologies. For today's sessions, we are also honored to have Pranav Seth, Head of Digital and Innovation, Global Consumer Financial Services, and Head, Frank by OCBC Bank. Nihal Matel, Head of Strategy, Asia ex Japan, Nomura, together with Nick Wall, Managing Director, Asian Pacific, Thought Machine, to share more on the trends of the digital banking ecosystems, how digital transformation impacts the sector, and how cloud banking helps in the scalability of digital needs in the banking sector. Following a sharing of an overview of their areas of expertise by the speakers, we will end the sessions with a panel discussion that is moderated by Karine Rafa, show host of BTCN Asia. Before we start the session today, I would like to share that if you have any questions, please post them using the Q&A function found at the bottom of the screen, and we'll address them accordingly. For those who may not be familiar with IBF, I would like to first give you a brief introduction on IBF and our offerings before I pass the time over to our first speaker. IBF was established by the MAS in 1974 as a training provider to provide functional training for the financial industry. Since then, our role has evolved into one of the standard settings of the skills and competency for the sector. We also took on career advisory services, and since 16 October 2020, we are officially appointed as a jobs development partner by the National Job Council to proactively work with firms to focus on supporting workers who are in job roles that are being transformed due to the wider adoption of technology in financial services. This is a quick look at our services and how we can support you across training, recruitment, and workforce transformation. You can find out more about our services and connect with us on any of these areas via IBF website. We've also put in place enhanced training support for the financial industry to further elevate training costs during this difficult period. The enhanced cost fee subsidies are part of MAS support package that was announced in April to sustain and strengthen capabilities in the financial services and fintech sectors amid the current economic downturn. The aim of the enhanced training support is to encourage more companies to send their employees for trainings and upskilling so that they are in a better position to help the company move forward when the economic activity normalizes. For the rest of the year, we have raised funding support for training to 95% across the board for all FTS and IBF STS programs, subject to prevailing grant caps. The funding quantum will be reduced to 90% next year before going back down to pre-crisis level in 2022. You can find more details on the enhanced training support on IBF website. You can also find eligible programs on the IBF Program Finder on our website. IBF will further supplement the commercial training support available with our free webinars like the one you are attending right now during this period to support the training needs of the industry. In addition, you can also tap on Learn at IBF Learning app for bite-sized learning at your own leisure. Okay. With that, I have come to the end of my quick presentation and will hand over the time to our first speaker, Pranav Seth, Head of Digital and Innovation, Global Consumer Financial Services, and Head Frank by OCBC. Over to you, Pranav.
Thanks a lot, Daphne. Can everyone hear me?
Yes, we are good.
I guess
a little bit
so.
soft.
All right.
Yes.
Okay. All right. Good afternoon, everyone. It's a pleasure to be here. So I get the privilege of starting this conversation off. As you know, from my title, I've been looking at the digital and innovation agenda for OCBC Bank for almost a decade. You know, with all the new banking licenses being given out, I've been given the additional task to look at Frank by OCBC brand, and we are pivoting it to how we compete with the new digital challenges as they come. So, you know, the task I have for the next 10 minutes is to give an overlay of the mega trends that are happening that have a massive implication on the digital transformation agenda across the financial services sector. So hopefully this can trigger some thoughts as we go along. So for the last 5 to 10 years, right, the digital imperatives at the banks have been triggered only by three fundamental forces. You know, the consumer going digital, technology, the consumer technology, you know, making massive changes into the enterprise technology world, And finally, the new business models that are evolving, whether it's the new fintechs that are coming in, or the new business models that have evolved due to the interplay of the customer and the technologies available. So those things continue. But what has happened? There are two perfect storms that have created massive tailwinds behind these three imperatives, right? And I think there are no prizes for guessing these two forces, these two storms. The first is the pandemic, and I'll come to the second in a minute. The first is the pandemic, and we are all living through this. But what has happened from a financial services sector point of view, with all the changes that you are seeing in your lives, right? I think that has gone to enable digitization of or adoption of digital banking for a set of customers that were the laggards, that were resisting adopting digital technologies. And case in point being would be the seniors, right? So seniors for us are now the fastest growing segment, and you can see it across the industry. There are so many people who are now taking on new or adopting digital banking. I have more than 150K new customers in a already highly penetrated market like Singapore who are doing digital for the first time. And more importantly, we have the whole SME digitization agenda that has gone on steroids, right? Up till now, for SMEs, digitizing meant efficiency. Now it is survival. So whether it is reaching the customers, there are 40 million new customers who have joined internet over the last 1 year in Southeast Asia, right? All of them are forced to do e-commerce activities, right? So the SMEs are now forced to serve these customers digitally, but more importantly, even the large crops, for them to continue sustaining their operations, right? The trade finance activities, the risk management activities, which were highly paper-based, the payments activities, which were highly paper-based, not because the infrastructure in the banking sector was not there, but their processes were paper-based. Now it's a matter of survival to digitize them. And the impact of this on us has been that our API teams for the corporate side, the SME side, who've been enabling, integrating with the SME guys for payment processes, trade finance, etc., are working overtime. The number of people who are signing up for the services is phenomenal. The things which anyway, simple products were being sold online. 50% of all our simple products, right? CASA, credit card, etc., are already being sold online. But what the pandemic has done, even complex products, right? So wealth management, we've had a 2.5x increase in the amount of wealth sales we are doing digitally. The way we are engaging our customers remotely like this over video conferences has exploded, right? We've done $2 billion of secured loans, housing loans, auto loan sales, all on the mobile platforms. So you've got a massive new group, the seniors, the SMEs, which were holding back, taking on digital massively. Secondly, the amount of services or the complexity of services that were being done online has suddenly exploded. So that's something which I guess we are all very clear about. The second main theme that is really accelerating digitization is the combination of the digital regulations that are coming in and the deregulation, quote unquote, that's happening. And I call it deregulation or digital deregulation, where across the region we see, we are getting new licenses being issued. There are new payment services, kind of different types of licenses which don't require you to be a full bank. You've got all the tech platforms that operate, creating a digital financial services unit, right? And at the same time, there is more increasing and more oversight on the activities of these tech players, these new entrants, by the regulators. So whether it's due to the Wirecard debacle, or whether if you look at the recent Ant financial IPO, there is going to be an increasing scrutiny on this. This is massively changing the operating space that we operate in. If you look at all the digital banks across the region, the fundamental of that is there is going to be there is immense pricing competition, right? So that has a huge implication for other financial, the whole sector itself, that we need to operate much more efficiently, and I'll come to that in a second. So there's going to be a pricing pressure, and the more successful of the cases that I am seeing, from the new challengers generally have a beyond banking ecosystem or a play, right? So whether it's ride-hailing apps which have a you know ride-hailing platform extending into finance, or whether it's the banks like OCBC who have financial services platform extending into healthcare with our Health Pass by OCBC app, what we are seeing is there's going to be an extension, or to reach out to these customers, to engage these customers. There's a massive play to go beyond banking and engage and create value at that intersection, right? With these two mega themes, right, I think I would like to summarize the key imperatives around three, and it's very, very simple. But I think the way to do them and the speed to do them is where the winners and the losers will be differentiated. So the first point is efficiency. With the price competition coming in, right, I think there's a massive need for us to rethink our products, right? So not up till now, most transformations being run as digital first. Now, I think most of the product design itself needs to be done as a digital only, concept. That means some of the product features need to change. The way they are configured in our core banking systems need to change. The whole end-to-end process needs to be thought through from a digital only perspective, because the customers are ready. Our products need to be digital only ready. And then related to that is a harder question of, even if the transactions move online, sales move online, how do you reduce cost on the agent and the branch channels? So the people who will be able to manage that cost reduction, or the change in purpose of the branch or the physical agent as a secondary aiding channel, an expert channel nonetheless, right? An intelligent channel, a human channel nonetheless, will be able to create much more efficiencies and compete much better on the pricing. Second, and I'm going to rush up a little bit, right, is around the differentiation that we offer digitally. Right, on that, I think there are two key points. One is personalization, right? Personalization either on pricing, again, based on your behavior online, based on gamification concepts, right? There's a based on whether it's products, or whether it's the way we engage, the way that we cross-sell to you on the digital platforms. Like if I'm talking to you in person, how do we create that experience using data and personalization? That's going to be a key differentiator. Finally, I think finance and what we call in OCBC banking and non-banking, we need to go beyond banking, right? Like the tech platforms are using their the core electronic commerce services to get into financial services. We have a huge opportunity to differentiate using our partners to create services which go beyond banking. So whether it is our a business dashboard which helps you manage your sales, whether it's the dashboard which helps you manage your invoices, but we need to go beyond banking to help our customers manage their finances much better. And finally, I will cut a little bit short. Finally, on a very macro basis, I think if we digitize so fast, right, and if we are able to do it, the industry is able to do it, I think there's going to be a massive need for scale. So that opens up a whole opportunity of how do we think about our inorganic options, so that when we build these digital technologies, we can operate and apply them at scale. Right, so that's going to be a huge. I hope in the next 3 to 5 years, there's going to be a massive corporate M&A implication of this due to the scale requirements. With that, I'll pause and I'll hand it over to Nikhil or Daphne.
Thank you, Pranav, for your presentation. Now I hand over the time to Nikhil, who would like to share more of his insights.
Thank you, Daphne, and thank you, Pranav. I think it was a great start to the panel. Just a quick introduction of myself. I head the strategy for Nomura in Asia, Japan, and Nomura in Asia, Japan is essentially a wholesale bank covering fixed income, equities, and investment banking businesses. And my department looks into both organic as well as inorganic strategy, and within which going through across digital and non-digital areas. Prior to Nomura, I used to be with the Citi and ICICI Bank between both India as well as the US, and been in the banking industry since 2001. Just to talk a bit more about, I think, what exactly is Nomura doing, and also how banks are thinking, right, as we go into the journey. And I think Pranav talked quite a lot nicely about how the world is changing, especially pandemic. But from a broader banking ecosystem perspective, and my chat is going to be a bit different because we are less retail and more institutional. So there's a bit of a contrast in which how we are looking at the opportunity. So for us, we have three areas to look into, right? One is around creating a diversified revenue growth, and how do we use digital to create newer revenue opportunities where it creates enterprise value. And then at the same time, how do we modernize and digitize our existing business activities as well as infrastructure. Now, within which there are three themes, right? One is around digital opportunities. Second is around digitalization of existing businesses, and third is around efficiency and cost saves, right? And that's so now, let me spend some time on each of those to give you guys a perspective about how the banking industry at large is thinking, and within which how Nomura is looking at it. So, from a disruptive opportunities perspective, right, our idea is to obtain critical mass in new business areas with potential to generate uncorrelated revenue streams in high growth markets with attractive streams, right? It's a clear recognition of the fact that the core traditional business is obviously either slowing down or becoming very competitive. And digitalization provides a really new opportunity for us to create newer set of businesses, wherein it could be newer product lines, or we will find different ways to serve the same customer, but in a more smart manner. Uh, and now, how do we set up these new businesses, right? And within which we have looked a lot into the approaches that we can take, right? So one of the areas is we set up new businesses in partnership with the tech players, wherein the established financial institutions like us bring in the domain knowledge, while we leverage more superior and more developed capabilities and technology from the third parties to drive faster implementation. Uh, Similarly, build an active, portfolio of strategic investments across fintech companies, and those are aligned with the priorities of the banks. All right, so differentiating versus a pure play, VC or private equity, which is more about IRR driven. This is more having a more, strategic fit and use case with ourselves. We recently announced a joint venture on the digital asset custody side called Komainu, where we have partnered with the two external players to come together and create this new business. Similarly, we have announced a joint venture with Brevin Howard to look into how do we create newer trading capabilities, and our ability to a better price and hedge on the trading side, leveraging AI and machine learning. So that's category number one. The other area that we want to now focus on, how do we digitalize existing businesses, right? Which obviously is a large part of the existing business lines, and the focus is to transform the core businesses via deployment of data analytics, using AI to better price products, using NLP, and other solutions to deliver, for example, research in a much faster manner to our clients. At the same time, how do we leverage electronic platforms, right, to be competitive in the areas of our strengths? For example, we are very strong in FX, very strong in the bond market, and a lot is changing, right? The prices are shrinking, the margins are shrinking, the volume at the same time are increasing, and the delivery modes are changing. So how do we cope up in a market where the consumers' expectations, are moving faster than the banks are able to deliver? So that's where a lot of focus is around, creating client ecosystem tools, the data lakes, and our ability to mine the information much better. So we recently roll out, number of toolkits around e-trading, around auto hedges, around alpha research, and so forth. Then the third focus of initiative is also around efficiency and cost save, right? And we can't undermine the importance of this, while the first two being more around revenue generation. Now, within which every bank has got a lot of sticky cost base, wherein the effort that banks have done to reduce cost base over the last 10 years, large part of that has been headcount reduction driven, but there's a limitation to which what banks can do on that, and I think most of the banks have capped out on how much they can reduce cost just by reducing headcount, right, which is not sustainable. So the newer set of initiatives that banks are looking at is how do we transform the platform front to back by leveraging technology. So a lot of our focus is also around leveraging third-party solutions to implement tools to streamline front to back processes. For examples include we recently rolled out Finergo across client life cycle. We're using number of NLP tools on voice to text workflow automation, and the whole game is how do we work through the product life cycle and the client life cycle, and then and try to implement various tools. So hopefully this gives a bit of a framework on how the banking industry at large is thinking. And I think the key point for us is the industry is at an inflection point, and I think there's a massive convergence between banking industry as well as the tech industry, including the old tech as well as the new age startups, to come together and create a solution. And I think at the institutional business level, there is a lesser of a competition, but more of a collaboration between the banks as well as the new tech ecosystem to come together to create something much more powerful and serve the end customer. Uh, and I think we are progressing very well in the journey along with a number of banking colleagues. And I think there's a lot to share in the rest of the discussion. So why don't I end here and hand over to my next panelist.
Thank you, Nihal, for your wonderful presentation. Okay, sharing. So now let me introduce you to Nick Wild, Managing Director, Asia Pacific Thought Machine.
Excellent. Thank you. Thank you very much. And my two colleagues have very eloquently, I think, picked up on the main themes that we're also seeing in the market. I'm going to try and leverage off of those and talk about it from the technology point of view, and specifically the cloud, and why I think now is the right time. Yeah, banking has been a huge user of technology right back into the 70s when IBM first sort of introduced the mainframes, and banks were some of the first to pick them up. And banks have spent literally billions of dollars over the years on computers. So so what's different about now? Well, I think Bill Gates in 1994 called out that banks were dinosaurs. We needed banking. We didn't need banks, and and technology was going to take over. I don't think he was wrong, but I do think he was way ahead of his time. What we've seen is incumbent banks like OCBC pick up the technology challenge and run with it. And whilst they may have been slightly slow out of the gate initially, and lots of exciting fintechs and neobanks rush to market with all sorts of creative ideas, and many of them are still there, and some of them are even making money. The big banks have and the incumbent banks have obviously sort of more than stepped up to the challenge. This slide used to be used to show how technology companies were going to take banks out. I think what it now does is kind of really illustrate quite how busy this market is. I mean, banks are under constant pressure from their own shareholders, but also from sort of non-traditional competition. But I think it feels to me as a consumer as if we've reached a bit of an inflection point, as Nicole pointed out. I mean, if you look now at the customer experience, especially post-COVID, where everybody's moved to digital, every bank, every neobank, every fintech has some kind of app, and then many of them have a card, usually in a bright color or another. But it's beginning to feel a bit samey. It's beginning to feel like the app like the web has sort of run out of creativity and what's coming next. And there are things like open banking and platformification and those kind of things that I think will have a huge impact on the market. But you kind of need to, I think, ask yourself, why does it feel like everybody has an app and a card and it sort of feels like it's stalled? And I will say, as a technology vendor to banks, I think a lot of the fault falls back to us, specifically as a core banking technology vendor to banks. The front office, the channels piece, both in terms of technology and the work that banks have done. I mean, Frank is a perfect example of it, incredibly innovative, and really trying to change the customer experience and be there for them. But if you look behind the scenes, there's often been sort of a massive amounts of money spent on creating hugely complex digital sort of integration estate, which is often focused around sort of protecting the consumer from the core. So a core banking system is at its most basic is the ledger, the system of record of truth about people's financial deposits and borrowings from the bank, and then also very often the product engine, and the products are often designed and defined and held inside this sort of closed box or black box. And the bank has a limited ability to be able to customize or adapt those to the latest latest needs. And actually, there's a code there. We've just done some research with IDC that talks about core banking. If people are interested, really good piece of work from IDC. But what that sort of closed box core has meant is a lot of money trying to hollow out the core or abstract functionality from the core out into an area where the products can be changed and adapted and integrated and to meet all the latest technologies. But I think we've reached the point now where it's time for a significant step change, not just an ongoing sort of iteration of a new core. And that step change, I think, comes with the cloud. And whilst the cloud is not a panacea for every digital ill, it does bring with it an awful lot of capability, along with technologies such as APIs, such as analytics and things like that says, I think we're stood on the edge of a new capability that banks that banks have you can leverage to move into the 21st century. So the key things, and this is borrowed from a McKinsey report, this chart on the right hand side, but I think they've nailed it spot on. So the key things is cost effective and fit for scale. That's what the cloud does, right? I mean, there's a huge opportunity there, and I'll talk on the next slide or in a couple of slides about cost savings. That's what the cloud does. Real-time data and insights. So most cores are to some degree or another batch. Batch oriented. People have found ways around that, but batch oriented, and there are end of period reconciliations, and that's where an awful lot of the information, the interesting information about your customer comes out. What's needed now is a real-time core that as customers exhibit behavior, that behavior can be detected, it can be fed into analytics, it can be reacted on, and the banks can start to move from a place where I sort of borrow money or purchase products or do banking into becoming a financial partner. I mean, my daughter, 14 years old at school, here we are in the 21st century. They still don't teach at school financial literacy and how to best manage your money. At best, I count myself as a reasonably educated individual and reasonably smart, probably averagely smart. I think I do a pretty average job of managing my money, and I am damn sure that my bank plus a whole bunch of latest technology and an insight on my behaviors could help me do a better job of managing my money. And I think that's one of the areas where banks will need to move into. Fully API and microservice enabled sounds very techy, but what it basically means is that the core system and the products that are being designed can be deeply integrated with a whole bunch of other things, whether that's analytics or whether it's as Pranav was saying earlier on around ecosystems and things like that to create a collection of services that suit the customer. And then hyper-personalization, which is where I think we deal with the challenge of the app sort of averaging out, is taking personalization and taking that customer experience beyond just the app and down into the services and the products that the bank is able to offer to its customers. And what I mean by that is if you look at it, I mean, in many cases as a bank, you're able to offer a suite of products which we've been offering for 50 years and in some cases 100 years. So current account, savings account, credit cards, all that sort of thing. That does not reflect that banks are full of unimaginative people, and there certainly is a regulatory issue here. But it really does come back to the fact they've never had the ability. IT has never, us as IT vendors have never given them the ability to define their own products. We've pretty much given them a 90% fully baked thing and said, that's what it looks like. We'll let you make some adjustments around the edges. What a system like Thought Machine does uniquely is products are defined as code. So they're defined as a Python script for those that are interested in their language. And what it means is you can start to create truly new products, hyper-personalized down to what the jobs are to be done, what people need. So what you see here is a real product from one of our customers. The idea is you open a main account, you get a card. First difference is that card is a hybrid debit credit card. And as a customer, I get to set the rules about what gets defaulted to debits, what gets defaulted to credits. So if I'm in my home country and it's less than $250, make it a debit. If it's more than that, make it a credit, for example. Simple example. And then to go further than that, because I'm a real-time system, if I make an expenditure and then suddenly realize I will need that money in my account in the next couple of days for some reason, I can hop onto the app and go back to that item and move it from debits across to credits. I can let the customer set up savings pots, and this is reasonably, this is becoming increasingly common, but it's often very difficult to do technologically. A system like ours allows that to be done much easier. So as an individual, I can say, I want to set up savings pots for rainy day fund and my daughter's education, and then I want to set the rules for how that's funded. And then I can also attach some form of credit loan product on the side, which is perhaps to help them, to help them overcome bill shock or cover shortfalls or things like that. And again, a whole set of rules can be set around that. So we've now got something that's building products, allowing banks to build products that are fit for purpose and fit for the 21st century. This is from a piece of work we've just done with Baines. I'm not supposed to be showing it to you, so there you go. It's an early vision on what's coming out in a joint white paper at some point in the near future. But a very detailed look at what are the cost advantages of moving to digital, and both Pranav and Nikhil talked about this. On average, what they're saying is if you're an existing incumbent bank, you can get costs down around 25 to 35%, which is your IT costs, which is huge. If you're a brand new digital bank, such as this sort of architecture on the right-hand side, you can get your costs down, perhaps 70% lower than is typical for an incumbent bank. Then the other thing is, as an incumbent bank, you can keep in-house all those things that make you different: the customer experience, the analytics of that customer behavior. Feed that back into a system like ours to change the products on an ongoing basis. So not launch a new product every couple of years, but launch one every couple of weeks, if that's what you want, the way you want it to go, in order to meet jobs to be done, and then integrate into a whole bunch of systems on the other side. I'm obviously aware I'm running out of time. Well, why is all of that important? Both of my previous panelists have talked about COVID-19. You know, while Bill Gates was, I said earlier, Bill Gates was early. He wasn't wrong. I feel like if you look at what digital disruption looks like for print media, if you look at what the internet did to print media, or e-commerce did to the high street, or Napster and now Spotify did to music, banking hasn't had that event yet, right? But that doesn't mean it's not coming, and it's not just me as a technology vendor trying to put some fear and uncertainty and doubt out there. You've got people like Jamie Dimon of JP Morgan Chase, and a particular C-suite I was talking to last week, where their CEO has announced that he wants his bank in 5 years' time to be a technology company first, rather than a bank. So I think there's a lot of dynamics. I agree with all of the points that Pranav and Nikhil pulled together, and I hope this brought a slightly kind of different view, the technology view of the why, and also how technology can perhaps take a role in doing that. And I'll hand back to our MC.
Thank you, Pranav, Nikhil, and Nick for the wonderful presentation. We will now start the panel discussion. Okay, that will be moderated by Kareem Rafa, show host, BTCN Asia. Please be reminded to post your questions to our speakers using the Q&A function found in the utility bar of your Zoomed interface. For those who have dialed in via phone, we will have to request for you to send in your questions via email to us at events@ibf.org.sg, and we'll address your questions after this session. Over to you, Kareem.
Fantastic. Thank you so much, Daphne. Thank you, Nick, Nikhil, Pranav, for those great introductions. You've actually answered most of my question in your presentation, so, you know, thank you. But let's try and keep this interesting. You've all spoken about how the landscape, and more importantly, the digital landscape, is changing in adaptation with different consumer needs and requirements, especially now in times of COVID, where the change is a lot more drastic. What I am curious about is, from each one of you, in your opinion, which financial or banking product is the ripest for optimization, and why haven't we seen that happen yet? So Nick, please start.
Wow. So I don't know whether, I mean, I think I would say that the credit product, we have, and I know that's a family of products, but we're having a discussion in Australia at the moment with a particular organisation. Australia, not so long ago, created a new set of regulations around responsible lending, designed to put the onus on banks and credit lending agencies to say you should not look at NIC's application in isolation. You should look at NIC as a whole and make sure that what you're lending him is responsible, and you're not going to take it in, get him into trouble. What this organisation has done is said, hey, instead of regulation as regulation, how about regulation as competitive advantage? How about we build a value proposition that NIC approaches us, we assess NIC as $100,000 of credit risk, and then we provide NIC with a fluid set of products that he can use and move the credit borrowings across seamlessly, rather than individually applying for each product. Now, obviously, there's some regulatory challenges there and all that sort of thing, and it won't be out in the next 24 hours. But the technology that I talked about earlier, the ability to build products as software that are aware of each other, means that Nick could turn up. He's just left college. I've just graduated. I've just got my first flat. I need to borrow some money to put furniture in it. I gradually pay that down. I then, meet my life partner. We decide to get married. I need to borrow some money for that. I've got my ongoing credit cards. I need to borrow a car. I'll be able to move across those products as my life goes through, and my bank is coming with me, rather than saying, sure, Nick, we'll meet all your needs. Make sure you work out which of our products you want, and you come in and apply. So I think that kind of approach, again, where the bank is able to set itself up and be the life partner and the advisor and those kind of things, rather than a shop.
That certainly is a more, I would say, troublesome aspect of the tech infrastructure when it comes to banking. Like, how do you keep track of all these things? To move on to say, Pranav, what is your opinion? What are you doing at OCBC and more in that space?
Yeah, I mean, let me just go back and tell a story. Like, so when I was growing up, one of my uncles, very dear uncle, was a bank manager, right? And any business in that locality, right? He was able to advise them not on a loan, but how to incorporate, what to do to do better sales, to manage taxes, you name it. He was the 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 key pivot of the business community inside that region, right, in that locality. And I think that's what I think Nick is also referring to. So now that's not possible with the scale that with the banks operating in a human manner, right? But how do we create products, right, using all the digital tools at our disposal, right, which see the customer as a whole, right? So the examples that Nick is giving, right? So specifically for Frank, right? That's how we are looking at it, right? I come out of college, right? It's my first job, right? I'm hearing friends talk about how much money they've made on Tesla, right? How much money they've made on Amazon. I want to buy that bag. I want to save for that vacation, right? So I think, how do we reimagine our products so they are not bound by the constructs of, here's a savings account, money in, money out, here's a credit card, you can borrow if you want, if you don't want, whatever, if you miss it, we're gonna charge you a fee on it. How do we get out of that and reimagine banking products as a whole, not around the customer needs, right? Which have elements of payments, which have elements of loyalty, which have elements of, when you need money, how do I give you a credit line, whether it's an overdraft, whether it's an installment, buy now, pay later, or whether it's a traditional credit card. How do we merge it into just serving the need and make it as easy as activating a button on the Apple Watch or on your wearable when I actually in the process of making the payment or looking or buying something, right? So I think from a very theoretical point of view, I think that's how I see banking to evolve with all the new technologies that are coming in, right? As the competition increases, as more digital born firms, start looking at financial needs, not uh, the wise oracle has always said, right? It's not the banks, but the banking. So as more and more people apply themselves on solving these needs, from a zero based design point of view to solve these needs, I think we'll have a new breed of products. That's what we are looking at, right? And again, the technology is a key component, right? So for us, we have a huge base of customers. So the question whether our core banking system with all the microservices layers on top of them, can it support this breed of products, or do we need to go into a cloud native solution, what Nick has to offer?
I understand that absolutely, and again, it's catering to the end user, right? It's making everything as accessible, understandable as possible, and ideally immediately when you're making that purchasing decision, what is the bank's flow to cater to you in the best possible way? Now, over the last, let's say, 5 to 10 years, banks have been doing something a bit more specific, right? They've been scaling down auxiliary operations and focusing on the one thing that they do best. In that sense, also I'm very curious what Nomura's approach is from a strategic point of view, what you feel the most ripe for disruptive area or product or feature of the bank could be. Now over to you, Nikhil.
Thanks very much. That's a great question. I mean, for us, the trading business is the core for us, right? And how do we get the best possible pricing, the best possible insights to the clients across, fixed income and equities, right? Just one example is around equity research for just to take on that. The historical models of equity research, the results come out, banks take, maybe they'll flash the note in few hours, and then they take end of the day to create research reports. Now, in the world of Twitter, where information flows instant, right? That model is looks a bit dated, right? Where we have a nice glossy report of 10 pages coming out of, let's say, 8 to 10 hours, right? By the time the customers have read so much, or the institution clients have read so much on the internet or on the Twitter, then that looks not as exciting as it used to be maybe 2 years back. So I think the main focus is around information delivery. How do we make sure that clients are getting access to information delivery with the same quality, but instead of 5 hours, it's more around 5 to 10 minutes, right? So that's where I think there's a lot of focus around better information and the speed of delivery to a client so that they are able to make calls on a more faster manner, and then with better quality information. So that's one area that we are focusing as an organization. And second area is also to give delivery to the products of the products to the customers in the cheapest possible manner, right? That's where the emergence of a number of FX platforms, and I think being in Singapore is fantastic because MAS is obviously putting a lot of emphasis on developing Singapore as a big jurisdiction for a number of these products internationally. So I think those are the two areas I would like to highlight that where we are focusing quite a lot upon.
That's fantastic. Thank you for that, Nikhil. It's also very interesting that you touch on the quality of information part, right? It's what MiFID II tried to do with the mandatory pricing of information for banks to make sure that there's a quality standard, and also that you have to adhere to a certain price versus quality within a bank. Now that we're touching on that regulatory aspect, what do you think are the hurdles or the enablers for each one of your ideas, so one after the other, that make these ideas either possible now, quickly, or harder to access? Let's start with Nick.
Yeah, so look, I mean, I think there's always the regulatory aspect, and I think what we're seeing increasingly across the world is regulators, not as the policeman or the Ministry of No, but as the promoter of consumer benefit with things like the digital banking licenses, with things like open banking or customer data rights or whatever it may be called around. So I think whatever happens, there is definitely the place there for the regulator. I think that if we look at the recent tragic case around Robinhood, which basically took gamification and the power of gamification and applied it to the stock market, and was massively successful. And look, I think most of their people, most of their users probably got a huge amount out of it, but with the access it allowed them. There were the occasions though where people got carried away with the game and got way in over their head, and then you had unfortunate circumstances up to including suicide and those kind of things. So look, with technology, and I'm obviously a technology evangelist, but I think with great power comes great responsibility. I think banks are incredibly aware, especially incumbent banks are incredibly aware that the base currency that they operate in is not dollars, it's trust. And therefore they, when people say about a large bank, oh my God, why don't they just use this latest piece of technology? I mean, there's a bunch of technical reasons. They've got a massive integration estate they've got to look after and maintain, but they've got the customer's trust, they've got regulatory implications and things like that. So I think it's not it's not an easy or straightforward answer. But then I don't think it should be. I don't think we should have unbridled technology and those kind of things in this space.
It's interesting you bring that up, the gamification aspect, and the way banks and in the case of Robinhood trading platforms acquire new users are much more at the pace of a social media platform, which have in very similar way added gamification to retain users and onboard new ones. Pranav, on your side now with Frank, how much of the gamification do you use, and what are the hurdles that stop you from overusing or enable you to provide a good ecosystem for your users?
I think it's a very, very good question and discussion, right? I think we are just at the cusp, at the starting point of using gamification. We are putting in nudges, etc. right? To put in people, to do the right thing. So whether it's around micro saving goals, hey, or whether, it's prevention of frauds, right? We see a, odd transaction, out of pattern transaction. We see repetitive, subscription patterns out of some things. We see money lying around which is not being used, which could be put for more, better use. I think that's the kind of stuff that we have, which we are doing already. In fact, we end up losing money on those because we get the customer to optimize the money, for them, right? And I think as we are further thinking through this whole concept of habit forming finance, right? I think it's constantly weighed by, the moral dilemma behind it, right? So I mean, for the people who have read or are familiar with the research on Hooked, all the techniques being used by the social media companies, I think for us, it's always weighing it against the thinking by Richard Thaler, which is about the choice architectures around how do you use these technology to get the customer to do the right thing, right? So as we are thinking of new products, I think it's always about how do you, save more effectively? How do you spend more wisely? You still enjoy, but how do you are wiser about it? How do you create the protection? So I think as long as, and again, Nick couldn't have said it better, right? I mean, we are holders of trust. We are, people who manage trust rather than anything else, right? So as long as our core guiding principles remain the same, we need to learn to apply all the nudges, the gamification, these techniques to do the right thing for the customer, not just use them to force cross sell and sell the customers. I think if any one of us tries that, I think over time they cannot succeed in this sector, in this product line. So we wear a stay true badge every day. Sorry, I didn't wear it today. And that's the internal mantra for us, right? When we are talking to customers, we're wearing it all the time that, hey, we're going to be transparent about the pricing. We're going to be transparent about a lot of things which other banks sometimes are not. So that's what's our moral star. I think how these technologies, how we can manage as we adopt these new technologies is something which we're very conscious of. And, hopefully we can find the right balance.
You couldn't have said that better, right? Both of you, Nick and Nick and Pranav. And I guess regulation is really there in the first place to align the expectations and the return of an institution and its end users, which is not always the easiest thing to do as a bank. I'm sure, Nick, you've got quite some insight having more of the trading side of Nomura. I know that you've gotten quite a bit of a rough time in the past, say, 20 years when it comes to regulation, but can you tell us a bit more?
Absolutely. I think the impact of any wrongdoing on the trading side can have like very large ramifications, right? We have seen maybe 6-10 years back, some of the European banks had to pay really pretty large fines, right, to the regulators, but also to book a lot of losses. They could be rogue trading, or they could be LIBOR rigging. So that's one of, from that perspective, we obviously increased quite a lot of our supervision, right? Every bank is doing that, but we want to make sure that our front office supervision on the trading side is really good. And then actually that's where the value of technology brings much more intensity, right, to the degree of supervision we can make, and make sure that we are not breaching either our internal rules or the regulations. So that's more on the governance side and discipline side, to make sure that the guys don't get carried away. But equally important is also how the regulative view is changing, right? Although we don't do a lot about individually at our bank around P2P lending, but that's one area where there was a lesser clarity, let's say 5-6 years back, right? And now there's more and more clarity coming in from different regulators, where there have been white papers issued by the regulators for people to react, and then P2P is being formed into the policy frameworks of the various various jurisdictions, right? And then that's something which is a very positive change. So the way to think about regulations, and the way we personally think, is regulators are actually not a roadblock, but they're actually an enabler, where they help institutionalize a particular idea, and then actually they help roll it out in a much more systematic manner, and they actually do it in a way which actually makes it more sustainable. Now you can be at the other end, and you can look at regulation as a roadblock, but I think at certain Namura we certainly feel that working in alignment with regulators actually helps a lot in the long term implementation of an idea. Uh, there's one area where we also feel that a lot more to be done, right? Beyond the trading side is also on the pure investment banking side, right? Where there's a lot of information around private side information. How do you really bring in technology? Can you put that information on the cloud? And what if something happens and there's an insider information get leaked? So I think that's where the importance of cybersecurity comes in, and how do you do that? So I think some of the advancement of technology is also a function of what sort of robust regulatory guidelines and infrastructure you are able to create to make sure that you're not running ahead of the security aspects while trying to win from the benefit of the technology. So I think that there's a lot of moving parts, but things are coming along much better and together versus what you would see 5 years back. And I think the ecosystem and the regulatory landscape is becoming much more conducive to roll these technologies out in a true business use case in a much more sustainable manner.
Just if you don't mind, Kareem, just to sort of pick up on that, I was lucky enough to catch a recording of a really interesting interview done by one of the senior executives from the FCA in the UK, which is one of the regulatory bodies there. And she was talking about the learnings that they as a regulator had over the last sort of 10 years as all of this digital banking and open banking and all those sorts of things have come in. And it emphasized for me that this is a journey for everybody, including the regulators. They don't magically know it all. They've got to do what they think best. And she said that their focus in the early years was about how to make sure, or how to help people get onto the mountain. The peak of the mountain was launching your own neobank. How do we help people get onto the mountain and have all the right tools? She said that what they switched their focus to over the last couple of years was more about how do we help the right people onto the mountain, i.e. those people that have a chance of making it to the top and aren't just going to gung ho and then die halfway up, sort of thing. So I think it is also we also need to acknowledge that regulators are staffed by human beings as well. This world is as they're working it out as they go forward as well. I know I was talking to Australia earlier in the week, and a gentleman who's a regulator in Australia, and they're talking about the consumer data rights, which is the Australian version of open banking, and how they've come under severe criticism because they've made it too hard to join the open banking thing and his open banking regime. And his thing is, look, I'd rather make it too hard and then slowly ratchet it down, that we work it out, rather than we drop the bar really low and people lose faith. They don't just lose money and cause massive social damage, but they lose faith in the financial system and all that sort of thing. So it really is. I'd agree. I don't think the regulators are, and I think I'm not saying that, but I'm saying it because I think it's true. I think the MAS are doing a damn good job of trying to not sit back and observe and be late to the party. They're trying to lead cautiously to help to champion the consumer. So.
Nick, I couldn't agree more, right? I think it's enlightened regulator here, right? I mean, we are lucky to have that in a way, because I think there are very few things that we are not doing, right? So whether it's around the payment space, the new Payment Services Act, or whether it's the open APIs, right? Or whether it's the new licenses. I think the key here is that it's not a cowboy, it's not the Silicon Valley, galley drums of we're going to disrupt this industry, right? I think it's the more measured beat to say that we're going to disrupt how it is done, right? But the principles need to remain, and the bad actors need to be kept out, right? So I think the nature of our business is requires that. And hand to heart, I think with all the initiatives that the government as well as the regulators doing, the partnership in any country could be really, really valuable. You take MyInfo, for example, right? I think we stand on top of the ease of opening accounts, right? Same day you incorporate a company, get it done, your bank account is open, fastest clicks to open an account, credit is so fast, right? So I think that partnership, the digital enablement at the national level and the regulator level, I think to me is a boon, right, so far rather than a hindrance.
And just to add one last comment from my side, for to complete this, there's also the digital question, right? I mean, we are quite fortunate, as both Nick and Pranav mentioned. So the amount of effort that MAS and then bodies like IBF, have taken to, to skill build on the fintech side, right? It's a biggest asset that I think Singapore has, and the wide ranging employees across the industry is getting the benefit of that reskilling, and then that helps the banks that not rely on 10 tech geeks to really implement innovation, but use the larger power of the thousands of people that we have, is actually also quite a big differentiator actually. And I truly believe that MAS does an outstanding job of actually promoting that digital quotient.
Indeed, we are lucky to be living in Singapore, where the MAS is definitely an enabler. And like you said, it's so intertwined and connected with the likes of MyInfo, where it's very easy for an end user to open an account, to access credit rating, and to basically interact with the bank in any way. On that note, how does the interaction between a bank and its tech provider, its core banking system, or its tech team, if it's proprietary, look like? How do you adapt to that ever-changing landscape in an efficient way? Let's start with Nick on the receiving end of the.
So I think the technology. I spent quite a few years running one of the legacy technology vendors, and our relationship with our customers was good. Both sides worked hard to work together. But we were working around a piece of technology with tens, if not hundreds of thousands or millions of lines of code in it, largely locked away in a black box with a limited amount of flex in it. And we probably spent most of our time talking about, okay, Mr. Bank, you want to do this, and my software will only go that far. How are we gonna do that to best extent? Under the new technology with Thought Machine, who I work for now, there is so much more conversation about what is it the bank wants to do, why does it want to do it, how do we want to do it, and then how do we the limitation is no longer the technology, as I say, cloud and us are not a magic wand, but it is orders of magnitude more flexible. So it changes. We get pulled into conversations now where you sort of pulled forward in conversations now where we end up in the room with the business people who are saying, hey, we want to go after this particular segment. Here's the job we think that needs to be done. Here's all the ideas we've had. Come join us and talk about how we do that, rather than, as I say, we're the big black box at the back end, and we spend a lot of our time saying, oh yeah, no, can't do that. So I think it's not just the technology, it's not just what it enables the bank to do, but it also changes the nature of the relationship, and also speed, right? I mean, we release a new version of our software every month, right? Now, for those that have ever bought core banking, right, usually the refresh cycle is measured in years rather than weeks. So I mean, which means then that our roadmap is so much more flexible. So obviously there is stuff that is built into our platform that only we can get access to, adding new APIs. But because our development life cycles, we're agile, our development life cycle is measured in weeks, and we work in sprints, then we can bring features onto the roadmap far more easily. So yeah, it changes the nature of the conversation. I think we become more of a business partner than a pure technology provider.
I was about to say it sounds a lot more like a partnership than a vendor-client relationship. Over to you, Pranav. And one of the questions that was just asked in the chat is whether banks are focusing more on the development of their banking and mobile app development or on the bank's website. So I guess that kind of intertwines with how do you see the future of the banking to client interaction?
Yeah. Okay, let me start with just a few comments on the partnership relationship, then I'll come about mobile versus the other elements, right? So I think it's a partnership, right? I think it always was because we are dependent on them, the recovery objectives, the reliability requirements are such stringent in the environments we operate that it cannot be a vendor relationship. They need to know us more than we know ourselves, right? So it's always been a partnership, but over the last few years, I think it's getting further deepened, right? Because I think at least the strategy we are to been taking is to create layers and layers on top of it to rip off the core. I'm sure Nick doesn't agree with it, but with our environment, right, that's how we are progressing towards a much more modern stack, right? So I think that there's kind of a dual kind of transformation. One is that new architecture stack, plus building our own build capabilities, creating our own developer shops as we get into more agile world. So I think that's the kind of two transformation. And actually most of our core vendors are part of that, design of how this should look like, right? That's where it's on the stack point of view. Now to the question on mobile versus other platforms, right? The truth of the matter is that the mobile growth rate is just incredible, right? So when we are having, the seniors, for example, the laggards, not laggards, people who've been resisting, adapting digital as they are taking on, right? They are coming through mobile. The youth are on mobile. So the rates of adoption on mobile actually are extremely, extremely fast than what we are seeing on our, internet channel, right? It's the same platform, but the desktop access is not that frequent, right? If we want to create the engagement, the habit forming finance kind of things, I think the medium is the mobile platform. So you'll see more and more banks pivot to that. But having said that, that's one part of the channel. You'll the other things which are growing are around API access and stuff. While I do agree that the consumer demand for a big desktop kind of application in very generic cases is reducing. I mean, I'm not talking about specialist trading and stuff, but overall it's reducing.
Absolutely. And I guess from a security point of view as well, the fact that you have to log into your phone with a fingerprint and that OCBC or the other big banks can verify you on the fly with a fingerprint or a facial recognition definitely adds to the usability on that front, right? Nikhil, over to you. Let's start with the vendor relationship or the partnership relationship.
Yeah, no, I think that's a very important topic, actually, right? Historically, we would honestly look at the external companies as vendors. I think in our experience, we deal with startups at various levels, right? So I ran an accelerator called Voyager a few years back. A number of the startups that we had, and a few were from Singapore, and one actually we even invested money. So they were more at a Series A level. And then the other end of the spectrum is the startups who have been there, done that, have already worked with 10 other banks, and they're more plug and play. But I think across the spectrum of these startups, we realized that initially we were spending a lot more time on the idea and fleshing out the idea, and but didn't pay a lot of attention on time on the implementability of the idea and how realistically it's workable. But I think through the process over the years, the view is, as Pranav mentioned, I think the startup need to know, or the tech vendors need to know us really well in detail, right? Because on the surface, everything looks much easier. And when we started implementing the POCs into more of pilots and real production, I think it took us much longer than we initially anticipated, and that's primarily for the fact that the banks have so much of a legacy infrastructure, and when you open up the real stuff, the accuracy levels change materially, right? And this primarily a function of the fact that banks have been built over many years, and for the tech infrastructure, even though you've open APIs and so forth, it doesn't really hit that quickly. So I think Uh, Based on some of the initial learnings, we now spend quite a lot of time where the external it's a bit of a co-working approach or partnership approach, as both Nick and Rona mentioned, and that has actually led to much more success in our ability to convert ideas into productionable plans, and also reduces the time right at the end of the startup. But also, what we have done is to make sure that we are not having a system where we have outsourced an idea to a startup and then startup needs to come back with the POC. And startup job is to make sure that the idea gets implemented. That will really never happen. So what we have done is to carve out a set of staff from our teams, right? Or at least they spend a good amount of time. So the ownership is on both the sides, right? As against at the end of the tech vendor to see it through the success, and that actually resulted in a lot more success compared to a more outsourcing vendor-driven approach.
Fantastic, and thank you for shoehorning my next question in there so effectively. You've mentioned working with startups and external vendors and how to, I guess, gain inspiration and to see what the market pulse really feels like and what other smaller companies are building. Over to you, Nick, first. When it comes to working with startups and smaller companies that often do not know how a core banking system works, even though they're working on an alternative credit rating system or whatever other solution, are you pro, con, open, closed, helpful, or not so much?
So we're pro, from a purely capitalistic point of view, we're pro people that want to use our software for good things, for the right things. We are, however, we built a team in Singapore in a very short period of time with an awful lot of experience. We are, however, very careful as we talk with smaller organizations to sort of make sure that they know that, hey, just because I'm experienced and I probably have informed opinions, that doesn't make me an expert around the regulatory stuff. And we are working hard to build our ecosystem of advisors, right from the big names like the McKinseys and Bains, who did the study I talked about earlier on, and Boston Consulting, and into the sort of SI advisors like KPMGs and all that sort of thing, and then into boutique outfits like Sinpulse sort of thing, who have deep expertise, whose core function and proven capability is that kind of advisory role, whether broadly or narrow. So yeah, we sell software, right? And we think it's a really, really, really cool piece of software, and we think it can help people do magnificent things. And we certainly have lots of experience in the company, but that doesn't mean you would come to us as a one-stop shop and we'll set you up as a new neobank. I mean, I think it's one of the things earlier when I said that 10, 15 years ago when you went to a Fintech conference, banks are dead, the technology is going to take over, all that sort of thing. And I think what most technology companies over the last sort of 10, 15 years have discovered is banking is actually quite hard. It isn't just the technology stack. There's an awful lot that goes around it. And there's this on the bigger end of town, there's is Google going to become a bank, or is Facebook going to become a bank? There's a reason they haven't become a bank, because they've looked at the regulatory aspects and gone, oh no, I'm not going near that. I'll operate around the edges and find a way to target profit pools. So yeah, I do think getting the right expertise in advisory when you're sort of venturing out is incredibly important.
Fantastic answer, Nick. Thank you for touching on the Google and the Facebook as well, because I'm pretty sure they've realized that multi-country regulation is very hard to weave around, especially when your client base is already pretty much everywhere. And Pranav, over to you.
Yeah, I think there was a so we kind of ran this open vault. I used to run the open vault, and our whole idea was to partner with as many across the bank, right, from compliance to operations to private banking. We wanted to make sure that we get the best ideas outside, which are outside in. So we ran this from 2015, and now it's kind of, we've decentralized it, and everyone is supposed to do that as part of their BAU, right? So while you're designing your solutions, you got to do it. So I think the core lessons for us have been, at least for us, because I think most of our focus is some things that can work in the next 3 to 5 years, can produce commercial results in the next 3 to 5 years. We have a fund separately, which is for longer term, options, right? But our partnerships are things which can generate revenue, can return in 3 to 5 years. And so what we found is that we like to work with certain, mature companies, even if they are very small. We want them to have a product or two already, something in the market, something's being tested. And generally, then we bring in our knowledge of the market, our knowledge of the local regulation, et cetera, and then we are able to work with them to make it real. The only exception is when we have an early stage company, but the founder is like a serial entrepreneur, third, fourth startup, right? Because otherwise, what we found over the years is that we struggled with all the resources that we put in. But when it came to, and POCs worked, pilots worked, but the moment you say that, hey, let's put it back into the, the big machine, and I think that many of the companies, the early young companies, were not mature enough to even appreciate why were we being such crazy buggers, right? So that's why, either serial entrepreneurs who realize that banking is more than just a, fancy piece of tech, or somebody who has gone through the pain and figured out with someone else globally that as baptism of fire, that to get it to commercial success, I will need to do all of this. So that's been our lesson over the last 5 years.
Definitely a very, very relevant comment, right? And I don't think, like you said, that a lot of fintech startups out there appreciate just how hard it is, and that an endorsement from a bank or the help from a bank isn't everything you need to be internationally successful, right? Nikhil, do you have anything to follow up on that?
No, I think my comments are quite in line with what my co-panelists have said, right? I think we've also found it that it takes very long lead time if you are trying to create a product with a startup versus the startup has actually a product which is being tested with a few other banks. So for us also the preference is to work with tech companies who have got some maturity, who have got some product testing with other banks, and it's okay to be fast follower in this stage, right? Especially with our core tech infrastructure and institution nature of the business, I think we find it easier with the lesser lead times and a lesser headache for the startup as well. And also the function of in certain cases you can actually have a collaboration. So we have two sets of companies that we interact with, right? One where we are leveraging their technology to enhance our offerings to the clients or to improve our platform. And then there are a second set of companies where we actually do a joint venture. So in Japan, we actually did a joint venture with Line, which is essentially the WhatsApp of Japan and parts of Asia. And then we rolled out essentially ability for customers to use the messaging platform to trade, right? So that's one angle where we are doing a JV to help each other and then win a completely different market. And on the other hand, we are doing the vendor relationship where we are able to enhance the product set or the tech platform and bring the digital DNA. And I think across all of these areas, having a tech provider which is mature obviously does help in the eventual outcome.
Very well put. Thank you, Nikhil. I'm going to ask you one more question, during which ideally, if any one of our spectators have any questions, please do post them in the Q&A. So my last question, ideally, or in what we've seen in the past, is that a financial infrastructure is built along three pillars: payments, credits and credit assessment, and finally, wealth management. That's usually the way it works. And optimization grows along these pillars to make them more and more frictionless. My question to you is, in your opinion, what comes next? What comes when these three pillars have been optimized to the max? Let's start with you, Nick.
Wow, I don't think I know the answer to that question. I mean, I'm not sure I know what the additional pillars would be. I mean, I think despite the fact that customer centric has been used so often, it's almost become, its value has become discounted. I genuinely do think that's where where the next wave comes from, and it probably affects all of those pillars. So and it's where I think things like Thought Machine, which is a real-time core where products can be defined specifically to down to the last decimal point, down to what the job that needs to be done. The products can be bundled, they can be fluid, all of those sorts of things. I think what you will see is optimization around the digital banking architecture I showed is banks will be able to say, okay, what's the things that differentiate me? And it's my customer experience in the channel, connected to my products and services, connected to my ability to analyze data and understand the customer's needs and do it. And it will be a much tighter circle there to allow the banks to serve that. They will also obviously continue to use software in the ways that both Nikhil and Pranav talked about earlier, which is how do we make our things like fraud and anti-money laundering and all of those sorts of necessary things, how do we make them more efficient? How do we make them more effective? On the credit side, there's been a number of brave runs at credit, it still seems to fall back to credit bureaus or very conservative models. But you're seeing people like there's a little company a startup in Indonesia called ICS. So 90-something% of the South Asian economies, Southeast Asian and ASEAN economies are driven by SMEs, right? And SMEs have probably been smashed harder than anybody in the COVID-19 thing. What ICS are putting together is they've built a really, really clever credit. They've used really powerful analytics techniques, incredibly well thought through and proven out in partnership with a whole bunch of other data providers in Indonesia, which traditionally don't necessarily come together. And they are using our software and that to create a platform to provide to link funders. It's a marketplace. It links funders on one end, people who would love to lend, but have no idea how to assess the credit of SMEs in Indonesia, and the SMEs on the other side who more desperately than others. And when we talk about SMEs, I think we kind of think about manufacturing or small things. I mean, they're providing, they're talking about providing credit to clinics and small hospitals and all that sort of thing, right? An SME can be all sorts of things, and so I think it will be, I think that will be the thing. It will be across all of the pillars, but there are fundamentally different ways. There are step changes that we can start to contemplate in the way the way that banks and financial organisations get to serve their customer base. So I sort of ducked the question, but because as I say, I don't think I'm smart enough to think up any other pillars. But I genuinely believe that's what
I do like your response though. That seamless overarch of the three pillars, I guess, is what makes like a fully inclusive financial system in that case. And very, very well answered though. Nonetheless, it's a hard one. Pranav, you want to take a go?
Well, the good news is that there is so much to optimize and create efficiencies in the existing products that, I think there's some job guarantees for some time. Try looking at the bond settlement process and, you'll pull out your hair, if you look at it from a digital lens and what's happening here, you'll be like, oh my God, how do we survive? Right. So I think there is a lot of cleanup to be required, right? You look at credit, the amount of data that we have, the data that we could own, right? We could get and to get better at it, at collections, you name it, right? I think there is a lot to do. But what that final, the next level of innovation will be, I think, I would require a crystal ball, which I don't have. The way I like to think about it is, two ways, right? So one is that, hey, you combine all of these things together from a customer's quote unquote, again, at the sounding, like a broken record for the last 10 years, it's lost value, as Nick has said, right? To look at the customer holistically and say, hey, how are we connecting all of these dots together to make it real for the customer? The answer is, while we have done some attempts, our competitors have done some attempts, I think there is a lot more to be done, right, to create that next level of engagement. So that's one way to think about it, right? How do you, make it more real, how do you help people spend more efficiently so that they can achieve their saving goals? How do you help them get started on their investment journeys without putting up $10,000 up front, right? How do you get them good advice in a very uh, easy to understand manner that they can digest and action on, while it's not going into the element of trading and extreme risk taking? So I think there is a lot to be done holistically around that piece. The other way to think about is that, and that's something that we have been doing quite extensively, is to think where that financial product is being used in the business context or in the life event context. So for example, in terms of us for selling mortgages, right? And many banks have done it. I think we now have the largest platform for house listings in Singapore, right? It's in partnership with other players, right? All the listing properties is the largest collection of agents, right, in Singapore. Obviously, there's a follow through that the whole process of mortgage approval is instant, and it's not instant. Okay, it's 60 seconds, and it's digital, and everything can be done, in just on the phone, right? Except for the land transfer, which hopefully we'll get to someday, the title transfer, right? So I think if we just look at the context of where the product is being used, right, and you go up the journey, down the journey, I think there is a lot to be done. For example, on SME payments, it's always the invoicing that comes before it, and that's where actually a lot of the blockages are. So how do you create either your own simple invoicing platform for the smaller guys to be able to do that, or you integrate into other invoicing platforms? So that's how, in a way, you continue to create value. For example, the other thing which we did, which I'm very, very proud of, is our healthcare app, right? Again, done in partnership with a lot of folks, right? A lot of folks with a lot of medical institutes that we work with, kind of a digital insurance provider, right? And how do we use that partnership to smoothen out the whole healthcare payment infrastructure, starting with the customer issues, right, of not being able to or not wanting to go see a doctor face to face, and taking it all the way to the insurance payment process. So we are on the start of that, right? But again, we are looking at a lot of our products from that lens to say, where's next? Where's the next? I would not say innovation. I think it's a very overused word, right? But how do we add more value to our customers and make their life more easier?
Also a very good answer. I like the almost seamless integration, the same way that you would expect a point of sale lending solution to work when you're about to spend something. This is when you're about to do anything. Where can your bank be and help you? Ideally, even before you think about it. Also very well put, Pranav. Thank you for that. Nikhil?
Yeah, I think I would say just two things that come to my mind. All right. One is a post-pandemic theme, right? Like in a high-touch industry where a wealthy guy wouldn't really get onboarded to a bank without even having a coffee or a lunch with a relationship manager, right? So now in this post-pandemic world, and same for investment banking, right? Would you have the bankers or the consultants not go and fly and meet the client? So the virtual client coverage is the model which is going to stay, right? And then the guys are getting used to it. So what sort of infrastructure gets created that? And then on top of that, how do you risk manage where people are doing sensitive stuff out of their home, right? In a sales and trading floor in the banks, you have all the cameras and all the supervision, right? On both on data security as well as other aspects. So how do you risk manage in a world which is becoming very virtual, very remote? So I think that's one area which is going to get a lot of focus. Right now we didn't have a choice, so everybody went to that zone. But as things mature and this model is going to stay longer term, so that's one thing. Second area is more around tokenization, right? As some of the core set of infrastructure, as you mentioned, is taking shape. The emergence of digital assets and tokenization from bonds to eventually to real estate. I think that's going to pick up quite a lot. That's again an area where banks can't do things on their own. They'll have to really rely on vendors and third-party specialists to really co-work and create something powerful, and which is also has to be, coming back to our original point, has to within the regulatory acceptance criteria, right? So this piece will scale up, but will take obviously time to, because of the regulatory angle. So these are the two themes I think, very separate points, but it should pick up quite a lot from here on.
Also very well put, especially on the tokenization aspects, the birth of a trustless system in that way. Once everything works efficiently, what is the hindrance of building a trustless system that holds everything together? I believe that we are running out of time. Daphne?
Well, I mean, if you have any more questions, anyone would like to ask one last questions, then we can just like continue. If you would like to, Kareem.
If anyone has any more questions, by all means, please do type them into the Q&A. I think we've touched on almost all of them in there. Thank you, by the way, all three of you for those last responses. That was a very hard question to ask. But do any three of you have anything to add that you'd like before we wrap up?
No, I mean, just to say, just to thank, IBF for the opportunity, the audience for their attention, and, you've done a terrific job as usual on the MC, and to, fellow panelists. I've really, really enjoyed the conversation. I don't know whether you could tell, but there's about 2 pages of notes in front of me now. So maybe I should be paying some fees to the IBF.
Do I have anything to add?
No, I think it's been, at least I've enjoyed it. I hope the audience enjoyed it too. Always happy to take more questions. Either you can send it to IBF and make it more tough for them, right? Or you can send us directly to us as well, right? Thank you so much for your time, guys.
Yeah. Fantastic. And Nikhil, for closing notes.
Likewise, thanks a lot. I think definitely an IBF for organizing this wonderful session. I know a lot of work goes into this, while it's probably easier for panelists to speak up. And thanks a lot, Kareem, for the outstanding job. And I really enjoyed the conversation. And yeah, please guys, feel free to send any questions via IBF, and happy to answer to the best of our abilities. But greatly enjoyed the session. Thanks a lot.
Fantastic. And I've really enjoyed talking to all three of you. You're all experts in your field and definitely heavy hitters in every sense of the way. So it's been great having you on this panel. Thank you to IBF for setting it up and having me as your moderator. Always a pleasure. And Daphne,
wonderful.
Over to you.
Yep. Thank you so much. Okay, once again to Pranav, Nikhil, Nick, and Kareem for the wonderful panel discussion. Okay. So for the rest of the audience, please do stay connected with IVF via our LinkedIn or via our website. If you have any questions for the panelists, please also feel free to drop us an email at events@ibf.org.sg. For those who have dialed in via phone, we will have to request for you to send us an email, okay, so that we can send you the certificate of attendance. The certificate of attendance will be sent to your registered email within 5 working days after today. Thank you once again for joining us. Until next time, goodbye.